My name is Nic Chahine. I've been working with Benzinga for 12 years, maybe 10 years. I don't know, a long time, 2012, 2011. I was an engineer in prior life and then a finance MBA, then did my own thing. All the while I've been trading one way or another. And then I found options by mistake because a friend of mine was doing something he shouldn't have been. And he didn't know how to explain it to me, so I did my own homework, and here we are. So I've been trading options almost exclusively because I enjoy it, and it literally gives me the edge. So I can choose the level of risk, and we'll talk about that in a second. So the idea of options, the cool thing I like about options, me being a prior engineer, so I'm a numbers guy. I'm not a touchy-feely kind of a guy. I'm actually, it's like, hey, show me, give me a scenario, I'll plan around that scenario. I'm not one to anticipate. I mean, I wish I could, you were like, I could replay what went on in the chat room today because it would have been a perfect layout. I'm going to try to tell you what happened. So somebody would ask, hey, what do you think it's going to do tomorrow? Like, I have no idea what's it going to do tomorrow, but I can tell you what's going to happen when it hits this level, that level, and this level. And it'll become clearer to you in a second. So I basically, all my day spent talking to other traders. And the goal is to get everybody to a level of confidence to where they're not winging it. So today, what happened today in the market, even though the scoreboard was not green, it was a loss for the bears. And especially those who didn't know what was happening throughout the day. And the concept is the same, whether you're trading throughout the day or you're trading weeks in advance. The concept is the same. You have to know who's controlling the price action so you can make decisions with the right assumptions. So we can talk about that. So if you don't mind, I will start with just a simple definition of risk. And then we'll go from there. So I'm going to ask you the definition. So if I walked into your class and you're teaching me investing, regardless of how, options or not options, give me the definition of risk. I'll give you a few seconds here. There might be a delay of sorts. So while you do that, I'm going to get a scratch pad. Money risk. What is this? Oh, we'll use that. The cost of losing, variance. That's an engineer, Dima. Chance of losing. Chance of losing. I like it. Probability of losing. I like it. Some people have been loss versus reward. Okay, how much can you lose? So I'm getting all the ingredients. Somebody put it together. Wayne is also an engineer. Risk versus reward, taking chance to win. Okay, so I'm going to save it. Everybody has the right idea, but let me put it down to very basic. Break it into two things. Okay, risk is really two things. First of all, you have the carrot out there, right? So, but the first ingredient is risk. Everybody got that right. How much can I lose? What's at stake? What's the consequence if I'm wrong? That is decision number one. So then comes number two, which is the odds. What is my chance? The percent. How likely am I to win or lose? So decision number one, how much am I going to risk? I discuss it with my family. Okay, I'm okay risking $1,000. Now, the second part of my decision is, what are my odds of winning or losing? So that is the part I manage. And that's very important to people to get the two, to differentiate between the two. And I'll tell you why in a second. So if I establish a trade and it goes wrong, people are too eager to just add to this one. If I were you, once I set number one, I forget about it. I don't average down because I'd be just adding to a problem, making my problem bigger. Sometimes I do it, but it has to be for very specific reasons and very specific period of time. I never do it quickly. I need at least a 20% variance between the two, or time. to pass, like a month at least. So I don't average down. So after doing one, I move away. I decide on the level of risk. That's how much I'm risking on that trade. Forget about it. Win or lose, that's it. I am not throwing more money at it in order to manage a problem. That's the basic idea. Now, what part do I manage then? My odds. So whenever I take a trade, whenever you take a trade, you probably have an idea. If you don't, then you shouldn't take that trade. As to what's the likelihood of you winning. So when people buy a stock, let's say this is Tesla. This is Tesla today. At some point, somebody asked me a question about Tesla short term, and somebody said Tesla long term. So I gave them a chart for action. So if they bought Tesla stock today, they had an idea, a reason why they bought it. And they have an expectations. They think they have the upper hand because XYZ, whatever they're saying. So the next day, price moves. Then they have to revisit that percent. Has anything changed to change their outcome in their head? Do I still have the same likelihood? If the stock drops to here and the likelihood of them getting to here is gone, then they should exit the trade because this percent reached a level that is unacceptable to them. And that's different from person to person. But it's super important to establish your parameters from the get-go. You go into a trade, first of all, because of a reason, and you write that reason down, write down that reason. If that reason is gone, I exit the trade, win or lose. It's gone. I shouldn't be in the trade. Then the risk part is I establish the money I want to risk, and then I manage my odds. So this really is the big differentiator between somebody winging it and a retail investor, and versus somebody who's smarter. I want to call a pro, or somebody that knows what they're doing while investing, regardless of whether it's stocks or options or futures. This has to be there. How much money and what are the odds, and which part I'm managing. I'm managing this part, not that part. So that's it. That's risk. So luckily, with options, that's why I like them. This part is a number on a piece of paper. And I'll show you in a second. So they give us the theoretical odds, an option leg that will be in the money or out of the money. So we don't have to guess. Like when I buy shares, I'm like, I give myself a 70% chance. In this case, I have exactly a number that I can use. Right or wrong, if the ruler is bent, I'm using the same ruler. It doesn't matter. I'm making the right decisions, at least based on the same parameter over and over and over again. And once I hit a right setup, I repeat it until it stops working. So that's why I like options. It's finite, it's tangible, it's mathematics. You have a number, you don't guess. And if you stick to your rule, then you have a predictable outcome, win or lose every time. Okay, having said that, we can take this picture off. All right, so how do I deal with the options world? So if you haven't seen an options chain, let's go there right now. Somebody today asked me about CVS, so I'm just going to leave it. Somebody in the chat room said, hey, Nick, how do you do an iron condor for CVS for next week? You're saying here, whoa, wait, jumping into iron condors right away? I'm going to use the question to lay out the concept of options. So to jump into terminology, an iron condor is a popular trade using options, selling option spreads that really doesn't take one side or the other. In fact, it wants nothing to happen. It's a range-bound trade. It's not bullish. It's not bearish. It's both at the same time, and it's neither at the same time. Okay, so the credit put spread side is the bullish side, and then you do something else on the call side, and it's the bearish side, and you want price to stay in between the two. Okay, so let's start with this side of the page. These are puts and these are calls. Now I looked at what you guys put in there. You had a lot of 3s and 2s, so I'm going to assume that you know the basics. So these are not bearish. They're just puts. They can be bearish, they can be bullish. It depends on what people do with them. Same with these. These are not bullish. They could be bearish, they could be bullish. Depends on what they do with them. What I'm begging you not to do is, if you see something on TV and say they are buying the blah, blah, blah call or put, don't pile into it. Okay, you've heard, if you've taken options classes before or read anything about it, you've probably heard this first. Most options expire worthless. First of all, I challenge that statistic, but let's say it's right, then you don't want to be buying it, because the people on TV, the Nigerian brothers, are telling you where the most options are, and then they tell you most options die worthless. So why on earth would you want to be buying them? Just think about it logically. Don't pile into something just because you saw it on TV. And if you saw it on TV, you're probably too late. Okay, so let's start with the put. If I buy a put, I'm expecting downside, or I need a downside drop in order to make money. But if I sell a put, then I'm thinking the opposite. So every put they buy, like if somebody says, whoa, there's 1,600 puts here, I'm going to buy it. Yeah, but somebody sold 1,600 puts there. So for every buyer, there's a seller. I don't know either. So why should I think that the buyer is smarter than the seller? In fact, the sellers are market makers, and they're usually smarter, and they have more money, and they can drive price action to help themselves. So don't pile in because you see a high number. Okay, that's one thing. Like today, there were 1,800 transactions here, but they were 1,200 before the day started. Okay, so just use logic. Don't be a sheeple, as I say. People who are just sheep and follow the herd, that's not going to get you anywhere with options. You have to have a thesis, you have to have a strategy, and you have to use your own numbers in order to be more successful, or get help, or join a group that can help you. So today, we used options and successfully in the chat room based on hours, literally hours. Why? Because we did homework ahead of time. I shared the charts ahead of time before the day started. And then I saw the price action. And then I said, you know what? This is a good base for the S&P. I'm going to get long buying calls in the SPY or the SPX. Boom. I said, that delivered like, I don't know, 40 points in the S&P rally. That was the very bottom of the day, rallied to the very top. And then I said, I'm out, because that was the upper end of my chart. So I had a risk reward. I had an amount I risked. I had my chart, and I exited, even though I wasn't sure if it was the best place to exit or not. So this is the idea of using options, because you give yourself the edge, whether from the charts or from the theoretical odds in here. So I mentioned having the theoretical odds. So for me, options, you can speak Greek if you want. There's the delta, theta, blah, blah, blah. Like today, somebody came to me, it's like, it's a gamma squeeze. I was like, okay, you lost me on gamma. This is not the room where we talk gamma squeezes, because it's just too smart for its own good. Keep it basic, keep it simple, stupid, as they say, the KISS method, and just stick to the basics. It's a risk reward. That's number one. How much am I going to lose? And what are my odds? Why things are moving, I don't care. So where is that odds number on this page? It's this guy, the delta. Okay, so yeah, the delta is my odds maker, and I'm going to simplify it for you. There's a column called delta for both calls and puts, and I'll simplify it. What is this? This is CVS at $85 at the close. So somewhere here is the current price. Look at the delta. It's about 50.5 here or here, 0.5. So this is your coin flip, 50-50. So if I buy a call up here, it's 0.02. That has very tiny chance its price is going to be there. So the lower this number, the less likely price is going to be there within this period of time. This has only 8 days. I randomly picked this one. Actually, not randomly, because the question was for next week. So if that person said, well, I want to buy the 95 call, hoping for a rally, and I'm going to tell them, you have less than about a 1% chance that you're going to get price up there. But if they buy it down here, they're paying more. but their theoretical odds, it's a 50-50 like buying stock. So you see how the delta can help me? So what does that mean? It means that I can develop my own method that works for me by playing around. Okay, I'll buy a delta of 25 and let's see how well it does for me. If it doesn't work, I'll go lower next time. I'll buy a delta of 40. If it doesn't work, if it works too well, I'll back off. So that's on the buying side. Personally, when I'm selling stuff, like on the put side, see delta, if somebody wants to buy the $81 put, they have very little chance that price is going to fall to that so they can make money. So for me, that would be the stuff I would sell. I want very little chance I would going to lose money. So I'll be the seller down here. If I'm buying a put, I'll be a buyer up here. If I'm selling a put, I'll be seller down here. You know, when you go to a casino, you don't want to bet against the house. If only you could bet with the house. That's how you bet with the house. You sell risk outside of the straddle, so to speak. So if you think the price is going to move this much realistically, then you want to sell lower so it dies in your favor, dies worthless. That's what we're doing. You're selling risk so it can die worthless in your favor. Most options expire worthless. Those are the ones I want to sell. That's my goal. How do I get to my method? It takes years, or you can just jump into a group that shares setups. So every day, almost every day, I share a setup, especially for the chat room, for something like, today was Beyond Meat. It dropped 5%. I looked into why it dropped. I was like, you know what? It's falling into support. Maybe it's worth selling a few put spreads to get long, or buying debit call spreads for somebody that likes that. And then I share a 15-minute video from the macroeconomic conditions to micro, which is the specific situation for Beyond, and what I'm trying to do with this position and why, and what I expect. And here are 4 ways I can get long the thing. So, and by the time I sent it out, it had already bounced, not by the town, like a couple of hours later, it had already delivered profits, is what I'm trying to say. So let me see if I can bring it in just to offer an example as to the method doesn't really matter as long as you have a method. Okay.
Hey Nick.
Yeah.
Sorry to interrupt you.
Yep.
For folks that are asking about Nick's subscription in the chat room, we can talk about that in like 10 minutes, but I don't want to spend a lot of time on it because Nick is just sort of, it seems like you're getting into a flow here, so I don't want to disrupt you.
No problem. Anytime. So first of all, I need to back off. This platform behind you is E-Trade. It's not that I'm recommending it. I've been with them forever. It used to be Trade Monster. In fact, the Nigerians started it, I think. So anyway, so this is a typical setup. At the time I wrote it up, it was 104 falling, trying to hang on to $104. So my point was, it's falling into 100. 100 was a prior bounce level. It's a cluster. I want to catch the falling knife on a BS downgrade. And I looked at when was the last time that one company downgraded it. It was before it had like 100% rally. So I was like, maybe they don't know what they're doing. So anyway, right now, the price as of the close was $4 higher. So these were the setups. I shared 2 that were buying stuff and 2 that were selling stuff. C is for credit, D is for debit. Whenever the trade is called a credit put spread, it means credit goes into my account. Debit call spread, debit put spread, they go in, I have to pay to open. So in this case, I said, I can sell a put, I can sell a put spread. For those 2, I don't need a rally to win. I collect the premium, and I don't, the price can fall a little bit. I have about a 26% buffer. This would be the, this would be the buffer here from current price. So I'm comfortable with this. This is my jam right here, selling stuff. But then if somebody prefers to buy stuff, then the buying is the debit stuff. Where is I need a bigger pen. There we go. So the debit stuff is I spend $10 per contract, and I specifically specified in my video, that is not my jam, because it wins fast it's a big win already, but it loses fast. This one, more moderate, a debit call spread. I can still more than double my money, and no shame in that. Slower trade fits my personality. Okay, so this was the setup today. So I'm very consistent. I'm not sharing a trade idea. I'm sharing the method. I'm very consistent with my method. I do this for myself, whether I share it or not, but I do share it almost one a day. Full video with my method. So if somebody's reading this every day, once a day, or 3 times a week, it's like a lesson, ongoing lesson for as long as they're there. So aside from the intraday coverage, and today's was fantastic, the method is repeated at least 3 times a week, about 10 to 12 to 15-minute videos each, repetitive. I don't reinvent the wheel every time, same format, exactly same words, same terminology. I don't change my method, and so it'll stick. So this is here's another thing that you need to do before the day starts. If you're actively trading or investing, you need to plot out your day, your week, if you're a slower trader. And I share a video, 10 minutes usually, 9 to 11 minutes, my strategy for the week. Very focused this week, last week also. It keeps me tethered to what's going on and like hovering. It's like if you're in a battle, I don't know if you know this, but so I grew up in the war, so I always go back to war terms. So when airplanes are fighting, there's always another set of planes watching, trying to coordinate the players, so to speak. So you need something hovering. And for that, I refer to my video and my comments in the video saying, okay, what's the big picture? And then every day I update myself. So this is the S&P 1 hour chart. For since last Friday, Thursday, we had the first hour flip candle, this, then that on Friday, then Monday, and then Tuesday, and then finally, this was yesterday, the candle changed, and we had a green close. Today, we went back to ugly first hour, but we reverted back to the highs of the day. So this was a loss for the bears. So how could I have seen this coming? And I'll show you. So this is without my homework, and this is with my homework that goes out every morning. So if stock was falling this morning and somebody has my chart, they'll say, okay, it's not time to panic down here. And if they did that, that's when I said, it's fallen into my support between 2 solid support lines. Time to not panic, number 1. Time to try to take an active trade for the long side. And this is what paid up. So if somebody bought a call, they made a lot of money. If somebody sold a put spread, which is what I did because I didn't have time to manage the call, so I sold a put spread, meaning I was bullish. And then this happened. I collected $2.25 to open the trade. I closed it for 60 cents. I paid 60 cents to close it. So the difference was my profit, and I didn't even have to pay attention to it much. So having the preparation allows me to manage my odds throughout the day. So falling into here, I don't panic. Going into here, this is where I said, I kid you not, it was like at the very top, I said, this is the breakout point, but this is my place to hand the baton to somebody else. So I closed my position, and it dipped a little bit into the close, but I would reload if it breaks out of here. So this is my short-term method, but it's the same for the long-term purpose. And Beyond Meat is the perfect example of that. I'm going to go to a daily chart, take out my drawings so they don't influence anybody. Oops, one day. Yes, thank you. So somebody downgraded it today. It fell 5%. It closed halfway up. So I looked left, and I saw this cluster. And it's a round number, 100. And I know Beyond Meat has beautiful fans that love it. I personally don't like the meat, but I do like the stock. So I looked at the fundamentals. They looked outstanding sales-wise. And price of sales is pretty reasonable. So all of that was in the video. And then I said, I'm taking this along, and I would stop out at 104 if it falls today below 104. It didn't. Or I would stop out if it falls below 100 in the next few days. Hopefully it won't. Otherwise, I'm long. So that same spirit applied today to the S&P on a 1-hour chart worked. So what I'm telling you is the chat room, yes, it's active, but you don't have to be an active trader to be in a trading chat room. It applies to any time frame. The concept is the same. Risk, it's always the same. I defined it for you. It doesn't change. How I do it using options is clearly defined in my videos in the longer, like the Beyond Meat. This was not defined in the video. It was laid out in writing. So it looks complicated, but it's the same over and over. So let's back into using Apple as an example. This is Apple November contract, 64 days. So if you don't know the definition of what a put is, any option is a contract between a buyer and a seller. Just like any contract, it has a term, a number of days. It has a term, a price. So I can choose it at 150, 45, 40, 160, 175. The ocean, it's an ocean of data, and the contracts everywhere. So every contract that exchanges hands has a buyer and a seller. That's why I have beef with when they say they are buying. They're making an assumption that the buyer is more desperate than the seller, or the buyer is smarter than the seller. I disagree with that. That just bothers me a little bit. So do your own homework and chase your own contracts that you want, that you think that fit your thesis. Okay, so that is it's important to see open interest. So what is an open interest? It's what was already there this morning. When we woke up and the markets opened, these are the positions in Apple for that month, for that week. We had 19,000 here, 56,000 here, 24, 25,000. We had all of these puts. This is what actually is in the market. That's a static number. That number does not change throughout the day. This number does. Yep.
Hey, so I made a little promise 10 minutes ago that in 10 minutes I would talk a little bit about the about the subscription. So we're talking about the inner circle chat. So that's the chat room that you've had for quite some. It's still kind of new. It's after starter, enhanced, and ultimate. If you guys are familiar with it, let me know. We're about to change it actually. Okay. So right now that's Rumble Talk, and we're about to the chat's gonna get a big overhaul starting next week.
So yesterday I sent you, Neil. I sent you. You got CC'd on an email with somebody's feedback on the chat room. It was just so joyful.
Really, and I missed it.
What? Look it up, and maybe I wish I kept it. I mean, I'm sure I kept it.
I'll find it.
Anyway, look in your email and pop it up, because it really speaks. It just delivers the message of why this stuff works. I will never go back to trading alone. Okay, even though I can do it alone, and this is a lot of work for me every day, all day. But I will never deliver it. I mean, I will never trade alone ever again. So let me see here.
I'm gonna find that email.
So right now they're not supposed to be in here. These people are in there hanging out. But let me see here to see if who jumped in. Awesome call, SPX. Oh, that was me. SPX out at 12:12 with about 48 minutes to go. Let me see here. Good call. Good call. So it looks like a lot of people jumped in on it, and somebody's discussing Adobe. And so a whole bunch goes on here. I don't have to be the leader of the pack, but I do offer, and we discuss. If somebody has a question and they want to discuss, say, a trade that's ongoing or going against them, this is a place they do it. Okay, somebody's upset with the flow here. Don't waste my time. Then you can record it and watch the recording. Then you can drive your own time.
Yeah, there you go. We're going to send you the recording if you're on Zoom. So guys, I just want to take a minute to let you know that you can get into the Inner Circle chat room. So that's going to be Nic's trade ideas coming to you nonstop every day. Education, mentorship is the key. Guidance, constant income generation opportunities using option spreads, Nic's technical analysis ProAs, which I don't think we've really gotten into. We're doing this for 78% off right now. And something special that we're doing is that we're giving a laptop as a gift if you join today before midnight. But that comes with a caveat. We are limited on our laptops now. So I don't know how many we have, but if you click the link, there's a link in chat. If you click the link and go to the checkout and there's a picture of a laptop, that means there are still laptops. When our wholesaler, which is connected to our checkout, runs out of laptops, the picture will no longer be there, and that's how we'll know that we've run out. So you guys will let us know, or we'll keep refreshing the page and we'll know. But it is a limited supply. We do expect to run out before this session is over. I know that it is fewer than 20 laptops that we have in there.
Cypher, sorry about that. Cypher, I sent you a direct message. Don't worry about it. You're in the right place.
Yeah, you're in the right place. Okay, cool. So guys, once again, here's that link in Zoom for my YouTube frogs. I'll drop that in there for you, and then we'll get right back into it. DB, I already have all of Nic's newsletters. How do I join the chat room? And Jessica, same question. I'm dropping that link in the chat for you. And the coupon code is I'm ready to join, all one word. I'm ready to join with no apostrophe. That makes sense, right? So there's the link and there's the coupon code. Can I get an additional discount instead of the laptop? Have questions, email Rodrigo or call Rodrigo. You got the number there. So like any kind of special thing like that. A lot of times we get folks trying to get into our chat rooms or trying to get into other things that we do that already have Benzinga product, or like they whatever. If you want to work something out, contact Rodrigo. Rodrigo is here. He's actually on the webinar right now. Here to help you. So yeah. And Artur, I am done talking about the subscription, and we're going to let Nic get right back to his thing. So go ahead. So go ahead, Nic.
The native restless.
Yeah. All right. Thanks, Nic.
Okay, no problem. So let me finish my train of thought here, we were talking about open interest versus volume. I get that question all the time. So the open interest is the static number that was there by the open, and they refresh that overnight. So tomorrow, this number will be changed based on what happened here. This is actually, so tomorrow these will tick to 0 and they will start counting, and this will stay static all day. So this is important stuff, and I'll tell you why. I study the open interest every day, most specifically on Friday, and I share iron condors for the whole week. And by the way, with all the drama this week, the iron condors all survived, which tells you it was much ado about nothing, and it's the media causing a ruckus for nothing. Everybody's ready for the scary monthly expiration. If I sold an iron condor and nothing happened in it, it means nothing happened in the price action when all said and done. So that means the market makers won again. So anyway, you do homework on your open interest. Last week on Friday, I pointed out that Apple had a lot of downside pressure from the open interest, and that's my interpretation of the data. And I said same thing for the SPX. Boom, the next day Apple falls 3.5%, 4%, whatever it was. And next couple of days, it was pretty tough. So that dip relieves the pressure that was there, and that's when retail investors chase and buy the puts, and then the positions transfer hands into them from the market makers. So if you're cognizant of all of this, you're ready, at least with the knowledge, so you know not to do the stuff that the retail investors are most likely doing. That's why they end up buying and selling at exactly the wrong time, and FOMO works up and down. So FOMO is good in the wild. It keeps us alive. When you see a herd of people running out of the forest, you know to turn around and book it. You don't run into the forest to see what's chasing them. That doesn't work on Wall Street. That is exactly what you should do. You should just go check out what's scaring everybody on Wall Street. So, okay. So having said that, now we know what open interest is, what volume is, what delta is, and the mark. And that's the only thing I really need here. The mark is the price that's between bid and ask. I don't even have bid and ask here. I don't care. I'm always dealing with liquid stocks. Otherwise, I don't even bother. So mark is going to be the number I'm looking for. Implied volatility. So what is that all about? That's also important. The implied volatility is basically telling you how nervous people are about this particular stock. If you go to a violent stock, you will have a high implied volatility. And it does affect the way the prices are for the options. So going into an earnings report, for example, the implied volatility would be double sometimes. And if that's the case, I'd be really wrong buying for that week. I should be selling for that week and buying out week, because then the minute it opens, you're going to lose half your money just from that fact alone, that it opened and the event is gone. So you have to be cognizant of all these little nuances, but they're consistent and they're the same. It looks complicated, but it's not. So are options great? Yes, because they provide you the opportunity to win really fast and with little money. But they're also bad, potentially, if you use them incorrectly, because they allow you the exact opposite, to lose really fast, a little bit at a time, and before you know it, it's like, what happened to my account? So you have to have a system and apply it over and over and over again. All right, so I'm getting a couple of questions in there about spreads. So let's talk about spreads. Somebody's specifically asking about a calendar spread. I'm not going to jump into the calendar spread before we talk. My watch is telling me to get up and move around. So let's talk about a regular spread. All right, so I'll use the example for Beyond Meat. All right, so today I suggested Beyond Meat might be a good knife to catch. And I said, you know what? If I'm buying a spread, there it is. Ooh, okay. So I would, if I bought this one, it was $10 when I was looking to buy it. It would have cost me $1,200 for one contract. One contract is $1,200. That's a lot of money for me. So I'll tell you why I wouldn't do it. So somebody that did that yesterday, this number was down 30% when I was writing it up. They lost 30% of their money at the today because the stock dropped. So the more spreading the risk is doing a debit call spread, meaning I buy a call and then I sell a call above it. So now I reduce my entry cost tremendously from $1,200 to about $400. And what's wrong with doing that? Nothing. I can still more than double my money. I mean, there's nothing wrong with more than doubling your money. And all I need is a rally back to 120 in 92 days. And I don't have to sit there for 92 days. If I get a burst and this turns into $5 or $6, I can just close it and keep the difference. Do I need to own shares in order to do this? I don't have to own any shares to do any options trade. I don't have to. So I could, but I don't have to. So the idea is to minimize my risk and take a risk that suits my personality. I'm a conservative guy. I like to fight for a sport. I love to race cars. I'm aggressive with those things. When it comes to money, I'm super conservative and very, I'm a planner. So give me a set of circumstances, I can plan around it. I saw Beyond Meat falling into on somebody's opinion. I was like, let me look into that somebody. Well, they got it wrong last time, and I've got all this evidence against them, so I'm going to go long. And that would have immediately priced me into some greens by the time the stock closed. So this is where options, using moderation. So aggressive person would do this. Hey, I'm all in, $1,200. I don't care. Well, that's fine if that's your personality. Or if you're not as aggressive, then you do a spread, maybe a $5 white spread. Only spend $2.35 to make $2.65 if I wanted to. Maybe I'll go bigger spread, spend $700 to maybe make $2,500. I'm just rounding. So depends on the personality. This can move higher too. If I wanted a complete lottery ticket. So if I want to buy a low odds low cost, big payout trade, I would do this. I would go way up here where the delta is what? I'll give you a minute to think about it. So this one has only about a 25% chance that its price is going to be here in the next 92 days. It's not too shabby. It only costs $1. And then I can make $5. So not too shabby, but lower odds. Somebody more conservative says like, hey, I want to make money as soon as it rallies. Then this would be it, something closer to current price. Whatever suits your time frame, your thesis, your style, your schedule, if you're going on vacation. If somebody wants to be more immediate with their bet, they go shorter time. Okay, so now we beat this buying stuff spread. This is called a vertical spread. Okay, so we just addressed the vertical spread of this setup. So somebody asked about a calendar spread. So now we're getting fancy. Okay, so if I buy this call, okay, it's going to cost me $1,000 almost, $985. So if I do a spread, I can do it like this, right? We just covered this, right? So what does a calendar spread? How does the calendar spread differ from a vertical spread? Vertical. So a calendar spread would say, okay, I would sell the call in November. So let me show you. Boom. I'll reduce these to 10, maybe 8. Okay. So I'm still buying that one that costs $1,000, but now I'm selling one in November and at 110. So yes, this is too small of a difference. I doubt that this will fire up like that. But anyway, this is not a trade I would do, by the way. But it illustrates the point of a calendar spread. So this is also a spread. I'm buying one and I'm selling one. I'm doing that in different calendars. One is in December, the one I'm buying out in time. I'm selling closer in time in November. This says that I expect a rally, but not before the middle of November. That's not me. So this is called a calendar spread versus the other one was vertical spread because it was here. Okay, then I took it to here. Now it's a calendar spread. So what if I do this? I sell, but not 110. I sell 115. I bought the 110 and I'm selling a 115. So now it becomes a diagonal spread. Okay, so if you want a visual on that, I think that will hammer the point home. Let's see here. So if we take a scratch pad, if I bought the 110 out in December and I sold the 115 in December, that's called a vertical spread, right? Spread. If I bought the 110 in December and I sold the 110 in November, it's called a calendar spread because it's different calendars. Okay, so I bought the one in December. I didn't sell this one. I sold the 115 in November. Now it becomes a diagonal spread. Change time and levels, it becomes a diagonal spread. So the maximum I could lose theoretically is the money I spend up front, especially in this one too, and this one. So what's bad about these two? If price does this, these two would lose me money. Now, if I act early enough, I can eke out a small profit, but I'll be crying. It's like, oh my God, I guessed right, and I just had the wrong trade on. I didn't make enough money. So that's why you have to know your time frame, your thesis, your plan of action, your schedule. I do diagonals all the time. In fact, today I did them. Yesterday I did them and saved my butt today in gold. I'm long gold for a long time. And then I said to myself, yesterday, I'm going to hedge my bet. And I sold some calls against my long calls, and I shared it in the chat room. So I'm long the 165 October call, already booked a lot of it. And I sold the 170.5 call for this week. I wish I had sold the 165 had I known it was going to crash today. But anyway, so I made money out of thin air while I'm waiting, still long the 165 call. So I sold a shorter dated, higher call. So I got myself into a diagonal like I just showed you last. And today, the one I sold is dead pretty much. It expires tomorrow. I can renew another one. I'll sell another one for next week if I want to, and keep doing until I close the whole trade. So yes, spreads work. That the strategies are plentiful, but everything is done with purpose. I don't wing anything. Sometimes I go, you know what? We have a lottery ticket, like I call them they call them 0 DTE, so 0 days to expiration. So, for example, when was it? Monday or last Friday? We've done it like the last 3 or 4 weeks. Big home runs where the market will be one place, and you say, you know what? I have a gut feeling for whatever reason that the SPX is going to go to X level by the close, and you buy a very cheap, 50-cent put or a call, and then it turns into dollars. So those are huge winners, but they're lottery tickets. I don't risk thousands of dollars doing them, and I don't do them often, but they have worked out really great of late. So we'll see. This is stuff like on the fringe. At the heart of options trading is a method, and it's always the same, and I always share mine. First things first, every day, what's the market going to do? I share the S&P. I share these lines to guide everybody throughout the day if they want them. I share the Qs, nice consistent levels. I know what not to do. When it's going into a resistance line, I don't start buying calls that day. When it's falling into support, I don't start panicking and closing my longs. I do this for the IWM. I do this for the futures, if somebody's trading futures. Need to zoom out to show that better. And the Qs, the futures on the NASDAQ as well. And a blurb about what I expect. So before the day starts, middle of the day, I have another write-up, hopefully with a big video about a stock I'm picking. Sometimes we get it right, other times we don't. BMY looked good for a trade, and the next day it fell, the trade is still there, but it's off to a bad start. Beyond Meat is off to a good start. So not every trade works out perfectly, but this is why I like to sell puts or put spreads. This way it has room to fall and I don't get hurt, versus buy calls or call spreads. So buying calls everywhere when markets are all-time highs is pretty risky. You have 2 or 3 bad days and it's hard to recover. You may have experienced the pain. But selling a lot of puts or put spreads, all you need is just one bounce or stop falling, and then your portfolio will be back in line. What you don't need is a complete crash that sustains itself, and we haven't had one in so long. You're saying, but its sentiment is so bad. And I was like, yes, but where is the evidence that sentiment is so bad? That's the S&P. Who's in control of that chart? The bulls are in control. Sentiment is fickle. They'll change their mind in one instant. So don't get roped into the prevailing meme. Establish your method. Get into a group. Get help. Form your own group if you can, or just jump into mine. I promise I'll take care of you. So the options methods, there are plenty. So we talked about spreads. What's my favorite trade? If you know me, it's selling fear when people are afraid. If I see something falling and I do homework and I'm okay saying, you know what, they're wrong, I'll buy the falling knife by selling a put. So I'll give you the stupidest example ever. So one of my favorite companies, AMD, during the pandemic, the pandemic crash was pretty scary because I had never seen a shutdown before. The whole world stopped working, literally. So down here, AMD was falling. Somewhere in the first leg down, I sold puts. So people were panicking. People were buying protection while the fire is ongoing. They were buying insurance on their house. So I sold puts for October. That was like February. For October at $22, and I collected $2, a little bit more, 2.25 actually to be exact. So I said to somebody, I'll buy your shares at $22 if you want me to between now and October. That was last year. They gave me, if I did 10 for 1,000 shares, they gave me $2,200. Yes, please. That's all I had to do, is say that I will buy their shares. That's what selling a put means, and I'll show you on the table. And then I sit. The money goes into my account. What happens to it? Price rallied, so that 2,200 turned into like 1,500. I'm estimating. I could have bought it back and took the difference in profit, but I didn't. And then this happened, so I repeated the same batch again. I opened another batch, except this time I sold them for $20 puts for July because the price fell further. I also collected 2.25, coincidentally. So probably not coincidentally, because I follow the same method. So the there, $4,400 went into my account, and all I had to do is own AMD and break even at 18 roughly. I'll do that all day, every day. That's what I like to do. Sell where there's panic. If I know the thing, I wouldn't have sold this in a company I didn't believe in. Okay, so I would take the risk. It's a calculated risk. So let's talk into how does one get long by selling a put. I will use Beyond Meat here because we're on a roll. So today it fell 5%. At one point during the day, in fact, what is it? I can tell you what it was. The $80 put was paying $2.30. The $80 put, this one right here, if somebody sold it today when I was doing my video, they promised somebody out there, when I sell a put, I'm promising somebody out there that I'm a buyer of their shares at $80 for 92 days. So money goes into my account. In fact, $230 would have gone into my account. By the end of the day, that $230 turned into $1.90, 190. So the difference would have been green in my portfolio. How can I make money? I already made money, but so what if the price falls? What if the price didn't go my way and it started falling? Well, the $2.30 would turn into 5, 6, 1,000. So I'll be down, 1,000%. But I don't care. Why? Because I want to own the shares at 80. So at some point, I would wake up owning 100 shares at $80. And what happens to all these negative losses I had with that position? They go away. Instead, I keep my $230 that I collected to open the trade, and I have the 100 shares. So my break-even point is below $78. So that would be my break-even point. The worst case scenario is me owning the shares at break-even point of 77 and change. So if we go back to the picture for Beyond Meat, 77 and change would be down here. So that's the worst case scenario for me selling the put. And if I look back, that's the pandemic low zone. I'm totally okay with that. That's a put I would sell. It's a calculated risk ahead of time. If I don't want that risk, then I would sell a put spread. And it would look like this. So why would a spread be different? Because I'm selling a put, so I'm guaranteeing somebody I will buy their shares, but somebody's guaranteeing me that they will buy my shares. So I'm limiting my maximum loss. I take in less money, my yield is slightly lower, the odds of success are about the same, just a little bit worse, but that's a calculated risk with finite amount of money lost without having to ride the stock from 80 to 0. Okay, so credit put spread, you've also heard it called a bull put spread. So those are my two favorite methods of getting long a stock. Okay, boring, Nick, come on. Yes, boring is beautiful. So this trade here yields just under 20% with 84, 85% certainty. So that's the kind of boring I like. If I tell you there's a stock that has an 85% chance it rallies 20%, would you not be all over it? I would. So nobody can tell you that, but I can tell you that from selling a put spread because that's what the statistics are. And guess what? Most of them work out. Every once in a while, you get a blowout. Like Ring, for example, went against me and I fell asleep at the wheel and I'm stuck in a credit put spread that's in the money. So I made a mistake. It was a small trade, but that's fine. I should have stopped out and I fell asleep at the wheel. That's the cost of me being super busy throughout the day. But it does happen, and it's luckily statistically it's 1 in 10. So if you manage your loss size-wise based on a set system, then the overall system works. The results are consistent, and the results they yield the promised percentages. So I was trying to find some questions in here, like what else happens in the chat room. Like somebody would say, hey, what do you think about the stock I'm looking to? Okay, so there was a stock today, everybody was talking OPAD. Okay, it was like up a bazillion percent. So I didn't know much about it. Somebody jumped in. Sam, sorry, Sam, we're outing you here. Sam jumps into Reddit and grabs all kinds of information from Reddit. So it's a two-way street. If I don't have time to do something, somebody in there will jump in and help us out. Somebody wanting the VIX to die because they were long SPY. So they posted the picture of Homer. But here's one. That's the Beyond Meat video. And we discussed, okay, so here are the Iron Condors for this week. All of them winners under duress. And this goes out in the video on Fridays with a table to go along with it. So I don't wing much. Everything has a statistical value to it with a buffer zone and an odds of success. So there's no winging it. That's the only thing I can say. So yesterday somebody asked me about Win. Today somebody mentioned Chewy, so I went long Chewy because they mentioned it. This was the SPX today. We it bounced, and I said I gave them an update. We are at halfway mark. So this where it would stall a little bit. Indeed, it did stall, and then they came back and they took it out. So a lot of stuff happens live. And the discussion is either intraday stuff like this comment, or longer term stuff like this comment, a whole week's worth. Or somebody was asking me about, somebody was telling me that Pinduoduo and JD are doing better than, I forgot the stock we were talking about. Oh, Win Resorts. So I said, let me see here. Anyway, so they suggested that we would look at other than Win Resorts. Boy, yeah, this works for day trading. If you're a day trader, it works for you. I'm getting pinged here, and I don't know what's going on. Anyway,
we got a lot of questions in chat that we got to get through.
Okay.
All right. So, let's scroll back a little bit. So Ankit asked, can I get an additional discount instead of the laptop? Talk to Rodrigo. The laptop is not built into the price. It's just a special gift that we give to you guys, but Rodrigo might be able to work something out with you, Ankit. So Rodrigo's information is there for you. Are there options for the Dow? Nick, I'm pretty sure you can trade options
DIA.
on the Dow using DIA.
DIA is the easiest liquid ETF.
There you go. And
don't sell risk in the DIA. Buy risk. It's always cheap. I never sell in it. But if you see a move coming, you can buy a call or a call spread. It pays quickly.
There you go. And just so you know, guys, we do have them rolling in. I believe that we're probably in the single digit laptops left. We're like 9 at most. And then let's see, Nick, questions for Nick.
Arthur has a question. How do I exit a spread? You just reverse the process. So if I had sold this, I would reverse the process this way to close it. In fact, let me see, maybe if I go into my account here, the practice account here, what trade did we do today? Beyond Meat. Okay, so there it is. So if I wanted to close this, I would close it. And it just buys back the leg I sold, and it sells the leg I bought. And I pay a price, and hopefully it's less than what I collected to open. In this case, this was a debit call spread, so I would be selling it to close it. Selling naked puts, I already mentioned that, Darshan. I don't know if you weren't here earlier, but I totally went through that whole concept like in and out. So you might want to revisit it. So,
Hey, Nick.
Yeah.
How are you doing, man? It's Rodrigo.
hey, I'm doing well. Thanks for asking. You?
Good stuff, man. A lot of people here that I recognize actually, from tier 1, 2, and 3, and from the chat room. But I did want to take a moment here at least to welcome the new members, Jessica DB, Tony, Gianni. Just want to welcome the new members for the Inner Circle chat room with Nic Chahine.
Oh yeah, there it is. Okay, we're not doing a workshop unless we get the horn. And so guys, congratulations. And for everyone else, those folks for taking the last remaining laptop. So if you want to get those, if you want to see if we have any left, check the page. And if you see the laptop there, that's going to let you know whether we have any left. And then Nick is answering the question about the best time to exit spreads. And that's in the chat, guys. So check for that.
Yeah, everything you guys are seeing here, Nick he does it every day in the chat room. So I know a lot of you guys are probably new and you have a lot of questions, but you can even send like a direct message there to Nic Chahine about your trades, about your strategies. I'm 99% sure that big majority of you guys are just doing calls and puts, and that's the recipe to blow up your account. I know because I used to do it. Right? I blew up my account twice, and I don't want you guys to go through that. I was lucky enough to be able to land here in Benzinga because, I was able to meet Nick, and I've learned a lot from him. And eventually he became a mentor to me. And we were just like, it'd be cool if we could offer this mentorship for everybody because it's so beneficial. There's a lot of misinformation out there about options. And at the end of the day, if you're doing something as risky as options, just volatile per se, if you're just doing the calls and puts, right, you definitely want to at least know what you're doing. As you can see, Nick has a whole variety of recipes of types of trades, and that's really what is lacking with the retail options trading community. We're just used to doing calls and puts. Why? Because that's what we see on Reddit boards, right? We see a 5,000% gainers, and we chase these lottery tickets, and that's not what we're doing here, right? We're not trying to do lotto tickets. We're looking for consistency. We're looking for long-term account growth. And I just want to make sure that everybody, at least here, we're all on the same page here because ultimately consistency is the name of the game. Some of you guys are asking the minimum account size recommended. If you have 10,000, that's more than enough.
Let me jump in here on those two questions. I think they're sensitive and I think they require. So somebody's asking, is this a training program or options program? So it's learning. My opinion is, in my chat room, what goes on is we learn how to better invest, period. Whether the investment is a trade, meaning shorter term, a tactical trade because A happened, I do B, or whether an investment longer term because I like this or that about this company, I do C. Whether I use options or not, doesn't matter. What matters is avoiding mistakes. That's number one. So you have a learning session that goes on all day, every day. Plus, on Sundays, I offer my time in the morning to get together with a live session, and we cover anywhere from 50 to 110 charts. And it usually takes, I say an hour, but it always takes 2 hours. So all this is available. So it's like a learning experience for as long as you're in there. Whether you can be in there during open session or not doesn't matter, because it's a method of communication between you and a whole slew of traders, including myself. So you call it what you want, an option session, a trading session, yes, and yes, and yes. As far as the size account, the bigger, the easier. I won't lie about it, but I have done it with a $5,000 account. I have done it much easier with 50 or 100,000. You just are restricted. So if I have a smaller account, I have to take smaller risks, more calculated risks. I can't make mistakes. And I have to make sure that the mistake, if I'm wrong, is not going to kill my account. So I have to be choosy with the tickers I use. So there are reasons why I would use the SPX versus the SPY, because it's cash settled and it's just all around personal preference. So yeah, small account is going to be difficult, but it's doable.
And then we've got the question. Oh man, you guys have really
There's a lot of questions. Okay, Tony Stevens, Rodrigo hit me up. Okay, I will do that, Steven. Good to see the participation here, guys. Please keep participating. That's
So
important.
Derek has a question about organized training for beginners. If you're a member of the options classes, plans that we have, I do have it's like a modular options, call it training program, introduction to options modular, meaning what's an option, what's a spread, what's a credit spread. I believe I have what's an iron condor, and I keep building on it based on the questions. So that might be available to you. I'm not sure as to what level of membership you have, but anybody that's subscribes to any of my options alerts programs, they have access to that.
Keeping these in here. Arturo Rodrigo's on the stream. He'll reply to your email when the stream ends.
So Kenneth, if you have stocks, the conversation will be, how can I put them to work? This is where you probably want to consider selling some, or looking into learning how to sell some covered calls. I've done that. I've helped a lot of people trying to learn that method, and it does work very well. It also works with calls. You don't have to own shares to sell covered calls. You can own calls to sell covered calls against them, like I did with my GLD. I don't know why they call it a poor man's covered call. It's just a complicated term for saying it's a spread. It's a calendar spread. It's a diagonal spread. For now, the hip name is poor man's covered call. Nothing poor about it. It's just another way of making an asset work for you. When I own shares, I have an asset. Let it work for me. When I own calls, I have an asset. Let it work for me. So Arthur, I don't know how many times I'm going to answer that. When is the best time to exit the spread? I typed it in for you. That was for you. If I get a pop, if I open a trade and it immediately moves in my favor and I get 20-30% of maximum gains right away, I just book it, especially if there's time on the clock. I rarely leave a spread to milk every penny out of it. Like today, I closed something early. Oh, the SPX, so it expires tomorrow. I still had 60 cents left on it, but I had gotten $1.90 out of it in about an hour. I was like, thank you, I will get out now. I thought about turning it into an iron condor by selling a call spread against it in the SPX. I said to myself, nope, I don't want drama tomorrow. I'm going to be busy building the new set of iron condor, so I closed it. Okay, so as far as subscriptions are concerned, I think the questions now would be to Rodrigo, since we have him here.
Yeah, and Rodrigo, just so you know, I went over to trustpilot.com. You guys are welcome to go to trustpilot.com. Where we've got verified reviews for the service. And I was just dropping a couple in there, principally 5-star reviews for Nic's recommendations, for Nic's trades, for Nic's style, for the way that he talks about stuff. So really good stuff. I just dropped some that might be relevant in there. Do we have to be on the chat room always in order to follow the trades and make money, or do we get alerts with specific signals like price? Yes and no. So the chat room you want to check in on. You don't need to be in there all the time if you don't have the time for that. That's fine. There's plenty of people that use the chat that are not in there all the time. But it's something that is very good to check in on when you have availability, and you'll be able to get what you need.
If you're a member of an options program with me, you will get an email with a full, I believe they send out emails, a full write-up that does not require you to be in the chat room. But wouldn't it be nice to see you in there and say, hey, how's this trade doing? It's a little bit underwater, so it's doing well. Should I close it? That happens in the chat room. So I don't share exit points because it's pretty arrogant for one person to say, I think you should close your trade. Every person is different. Every portfolio is different. So if I have too many trades and I have a win, I would close it. If I don't have too many trades, I only have one trade and it's going well, maybe I won't close it.
Kenneth just bought calls on UPST at 270
What?
for 440 and closed at 1530. Way to go.
Okay, so UPST, we went long when everybody hated it, and then it took off like a freaking rocket. Let me see. Do I have my lines? So anyway, UPST was a full-blown write-up. You can probably go back and find it in my log. And let me show you my drawings, and you can tell. There we go. This is a daily chart. This thing is unbelievable. So this was the credit put spread, and this was the debit call spread from my write-up. And if somebody did both, wow. I mean, what in the actual, I don't know what's going on there, but we called it down here. Hit me.
So one thing that's really cool about your trades, Nic, is that we get the probability of success.
Oh yeah.
Would you mind just going back to E-Trade and setting one up so we can go over that?
Sure. So if I wanted to, let me see here. Okay, let's go to trading. Pick a ticker. We did Beyond Meat to death.
Do Palantir.
Palantir. Oh, another good, exciting stock today.
That's
so
right.
Palantir is up out of the blue, but we've been positive Palantir forever. So it's not a surprise that they popped. Damn it. Just because you cussed, I'm not going to answer your question.
We'll hit it. I think we should hit it eventually.
Blasphemy over here. So the Palantir has a long runway ahead of it. So it's in the right segment. It has business with commercial and business with the government. That's a good balance. So the fact that the government does business with them, it just tells me that, hey, somebody in the government did homework and they found a good company. So I should leverage that. So on dips, I sold puts and put spreads with specific risk levels. So what I did is, okay, so I went to Palantir. There's going to be a lot of lines. I'll take them out. Somewhere here, I sold puts down here, and then somewhere here. I remember selling 19, 18 put spreads all the time, and then 18 puts naked. So this becomes my, like, anytime it goes below 20, it's an automatic, hey, let's trade it long. Okay, because if the markets don't crash, this thing is going to bounce off of that, especially in the long term. So this is where I go into the spread here, and I say, okay, so my time frame is through November, and I want to buy an upside potential trade. And this is where the decision comes. So 50-50, the delta, if I buy it at current price, or I want something low odds, I would buy it up here. I'm a guy that likes to buy close to 50-50, but not quite. Mm-hmm. This doesn't represent well today because of the big pop, so it's kind of skewed. In this case, you would almost never find me chasing a 5-6% pop. Rarely. This is where I'd say, you know what? If I'm not long, I'll wait for the dip or for the next breakout. In fact, this is halfway through the target one that we had, and maybe if you look left, this has not been a good level to start longs. This was all GME with Reddit. This now is a breakout on its own, cup and handle-ish. So it has runway to 34. It's how fast am I in that is where I decide whether I want to buy. And in this case, I would buy at the money, because going above the money is like yesterday's long shot. Now it looks like at the money. You know what I mean? I hope I'm explaining that right. Like the line was here yesterday, and now it's up here. So if I buy up here, I'm really buying something that was worth nothing yesterday.
So I just launched a poll, and Nic, I'm wondering if you can construct something to illustrate this. So I'm asking everybody on Zoom, how would you like to know your odds of success before making a trade? That's not something that normally I think traders get. You don't get that from your brokerage. How would you like to know your odds of success before making a trade? And I'm wondering, Nic, if you can construct something here on E-Trade so we can illustrate this point.
Sure. I'm not going to.
It's possible to do it.
Yeah, of course. I do it. I mean, every video, the video for Beyond Meat today was, I'll go to that since we've discussed it and now it's familiar to people. So Beyond Meat went to December. If I wanted to sell a put and have an 85% chance of success, this would be the put I sold. And if I sell that put, I can specifically say that I have an 85% chance of success. Now, what is success? Is stock never get assigned to me. This dies in my favor. It dies for zero. I collected $2.30 today. Time ticks. Price never goes there. They didn't give me assignment on the shares. Boom, it dies. I made money out of thin air. I don't pay anything to do that trade. Money goes into my account. It's a credit. I'm selling something. There is a buyer out there buying insurance or shorting the stock. I'm the seller. I'm positive on the stock more than them. So my odds of success are 85. If I'm aggressive and I want, only 65% chance of success, I can do it here and I get rewarded way better. $700 for one contract. And my break-even point is like 93 down here. But that's not my style. Why? Because it's almost a coin flip, people. 0.5 is literally gambling, a coin flip. So you think, oh, I've got a 50% chance of success. Really? You're guessing. It's a coin flip. I've got a 70% chance of success. That's so close to a coin flip. So to me,
can you circle where it shows the odds of success?
Yeah.
So folks and everyone, I know that you got like a pencil thing.
Okay. So how about this? Where is it? Okay, it didn't come up.
Okay, guys, and if that sounds good to you, I mean, there are tons. There's so many ways to make money in the markets. That's all there is to it. So many different ways.
This is my odds maker, the delta. Okay, the delta is my odds maker, and this here is current price for Beyond Meat. So anything around here is really a coin flip, whether calls or puts. If I'm buying or selling, the odds of it working out or not working out are a coin flip. It's like buying shares. Price can go up, price can go down. I have no edge. When I buy shares, the only edge I have, I think this is what Neil's trying to get to. The only edge I have is that I do homework and I'm right. That's it. Whereas with the options, if I use the delta as my guide, I can pick whatever success rate I want to start my trade. So if I'm selling risk, like I did today with Beyond Meat, I want low odds because then I'm the seller of that bet. Somebody is buying that bet from me. I'm selling somebody a lottery ticket and I hope they lose. So if I give them a tiny number, they're going to lose unless something extravagant happens and price does that. Okay. Mm-hmm. So this is my odds maker right here, the delta. And here at current price, it's a coin flip. He can win, she can win, I can win. Down here, I have the upper hand, 70-30, because if they buy it, they only have a 28% chance roughly. If I get down to here, now I really have the odds in my favor. If I'm selling, I want to go down here while still getting some profit for it. If I'm buying, I want to buy up here because I want a small drop to start making money. So when I'm a seller of risk, when a stock is falling and I'm trying to catch the falling knife, I sell puts or put spreads into people's panic. That's when the puts are heated. They have the most premium. I pick a delta that I'm comfortable with, the odds of success that I'm comfortable with. I personally aim for 85% in my favor or better.
All right. And what I'm trying to do is bring that thing that we started with. What was the topic that we started this workshop with, guys? Risk. If you guys remember, put it in the chat. Nick just spoiled it, but if you heard that, drop it in the chat. Do you remember what idea Nick asked you for the definition? And it is absolutely the cornerstone of how options work. You make money. Veronica got it right away. Options make money for traders and investors because risk exists in the market. So, Nick, we're bringing this all full circle. Knowing the risk going in is the nature of this strategy. So we are putting the odds in our favor. And that's bringing this thing full circle. That's, Nick, what I was trying to get to. Yeah. So, guys, that is it. You sell the lottery tickets. Exactly. What are your odds of winning if you get a lottery ticket? It's 1 in like perhaps several million or something like that, right? what are you? Who's on the winning side of that? It's the organization, the lotto company that is selling the lotto tickets. That is the strategy here. Nick, and I don't want to take up too much more of your time because I know it's starting to get late.
I appreciate it. So I'm glad you led me to the trough. Okay, so finally we got it. So I started by saying risk is two pieces. One piece I set and forget, and the second piece is the piece I manage. So if I set a trade and I collect the premium, and then that percent gets too hot for me, so the person that bought the lottery ticket looks like he's beating me, then I say, you know what, I'm going to book my loss here. Sometimes I don't. I say, you know what, give me the shares. It all depends on the stock. It all depends on me and the situation, my portfolio. But the good thing is it's a calculated risk where the worst case scenario should not be a disaster. Like if I sell puts to make money in stocks I can't afford to buy, I'm asking for a problem. I should be selling put spreads, not puts. And if I'm selling them willy-nilly without a plan, also I should probably stop it. So knowing the odds and managing the risk as price moves is the best recipe for success. So this is it. The idea of selling risk for income is boring, but that's what I like. If I had the choice, I would, open 10 trades, one a month, and go on vacation.
Steady income is the goal here. Steady income, as close to whatever passive income means.
Yeah, well,
this is as close as it gets. There's some research, but you were doing it together. So,
the idea is if you sell a risk, and there's only one scenario that can make you lose money, only one. So what is easier, to find a place where a stock is going and try to buy it, or to find all the other places where it's not and find a place to sell risk within those places? That's the easier part. So if I sell a put, if the stock rallies, I make money. If it doesn't, I make money. If it falls a little bit, I make money. If it falls a lot of it, maybe I lose money. Even then, it's a maybe. So.
All right. So I want to know, chat, steady income. Does that sound good? If you can find a way, or if you can understand a way to have steady income, give me a yes in chat if that sounds like something that makes sense for you and that you want in your life. And give me a no if you don't want steady income. I want to know who doesn't want it.
Yeah, not me. I'm too busy.
Yeah. Too busy losing money. So yeah, the obvious answer is yes.
Kirk, that's funny.
So Nick, I want to thank you for this workshop on how you construct, how you think about stocks in general, how you look at charts, which is very unique form of technical analysis. And I learn a lot from it every time you do these. I want to thank you for taking us through how you construct your options trades, and ultimately introducing this concept of using your strategy to make steady income with options. Nick, any final parting remarks before you get back to your thing out there in California?
I strongly suggest that you don't trade alone, because you will tend to forgive yourself for mistakes you wouldn't if you're in the company of others. If you're not shy about sharing your ideas, I suggest you don't trade alone. I bet you will have better success. You will be more aware.
There you go. All right. Thank you, Nick. And guys, Rodrigo and Neil are going to stick around to answer questions that you have. Because if you're saying yes right now, I think that there's something else that you guys got to do. So we got more in store for you. So don't go anywhere.
So I'm okay to leave without crashing the party?
Well, I'll be sad, but I think you're okay.
You live? Okay. Later.
See ya. Lorna, I missed much of this and would like to watch it again. We'll make sure we get you a replay. Don't worry, Lorna. Okay, that's Rodrigo. Hey, Rodrigo.
Hey, what up? What up, guys? I know we just went through a very big block of learning, and I got a bunch of emails from you guys, but look, let's keep in mind here the goal, right? Like Neil and Nick repeated it, right? We're not trying to buy the lotto ticket. We're trying to sell the lotto ticket, right? So you literally don't want to go against smart money. You want to literally trade with it, right? Don't go against the casino. be the casino, right?
Yeah.
Sell that lotto ticket. So in the chat room, I want you guys to keep in mind, there is live trading. There is basically, direct access to Nic. On top of that, you're getting daily picks, literally daily picks, suggestions of trades. You get feedback on your strategies. You get feedback on your trades. As you can see, there's a lot of people here that, they just buy calls and, it doesn't work out. Well, there's different types of option trades you can make. But the number one thing you need to keep in mind is to know what you're doing, right? So if you don't know what you're doing, that's when you hear these crazy stories of people that lost, 200, 300, 400 grand. And I've gotten some of those calls, unfortunately, of people that, hey, I just lost 100 grand trading options. I need help. And really, where I come to it without all these calls is that I really wish that, we would have gotten in touch before, right? Before you went into the market with all that money, right? Because who wants you to go into the market with all that money? Big money, because they'll take it from you like stealing candy from a child. And that's what we're trying to avoid here. We're trying to educate traders, especially for options. And it is something that you do want to take into consideration. You don't just jump into the market with 100 grand. Do you just every time you have 200 grand, do you just go buy a house and pretend you're going to flip it and sell it the next day? So there's no reason for somebody logically to really approach it that way. But we know there's a lot of emotional trading out there. Everybody wants to go in and get the lotto ticket, and you're thinking, there's no way I can lose 100 grand. There's no way. But guess what? The market doesn't care about your feelings. It doesn't care about your emotions. It doesn't care if that's your lifetime savings. Big money does not care. They'll take it from you every day. So educating yourselves with the best trades, with the right mentor. On top of that, the laptop. I know we have a couple left, and those are actually in my closet because I had to save a stash of laptops because we're out. We are out. So I'm basically, I have the last stash of laptops, Neil, here.
So there you go, guys. If you want to get the laptops, get them quick. There's very, very short supply. But that's just a gift that comes along with joining, because we want you to have everything that you need, including the hardware, to be able to start trading right away. We want you to join and then be set to go. This is a switch. It's an on-off switch. You're turning a whole life of new opportunities on by joining. That's the way we designed this. That's why we like working with Nic. We worked with Nic for a very long time, and there's just no one out there like him. So blah, blah, blah. Will you be replaying this? You will get, if you're on Zoom right now, you're going to get a replay sent to you. We'll make sure you get that. We don't know how long it will last. Because we do not keep all of these videos because we do too many of them, but we will get one sent to you. Just make sure you watch it as soon as you get it. What laptop brand is it? All name brands. It's all Windows laptops, HP, Asus, Acer. It depends on what is in stock. And like I said, we are running low on stock at this time. So I don't know, microchip shortage or something like that, but it's harder and harder to get laptops at the price that we want to get them at. So we just don't have that many specs on the laptop. At least 8 gigabytes of RAM, so you can run any trading program. That's the minimum requirement for pretty much everything out there. All right, so that's why we set it that way, and that's what you get. So it's at least 8 gigabytes of RAM. The other things vary by availability. Timothy left you a message, Rodrigo, so make sure you get to that tonight.
I will.
I want to congratulate some of our new members. Let me refresh.
Oh, it's totally time. It's totally time for that.
Yeah, they're flooding in here. So definitely big. Okay, so Lewis got both the starter. So Lewis, good for you. Lewis got the starter newsletter, and they also got into the chat room. So big shout out and welcome from the Benzinga Inner Circle family, options family. Welcome, Lewis. And I got emails that I'm going off of, so I don't want to dox anybody. So I'm just gonna say Gopinath. Wait, I see you. Welcome, congratulations. We've got Ghani. We've got Sharma, Ben, and then we're getting down into Nesca.
I know Ben.
Well, there you go. I mean, some of you folks I recognize. Like some of you folks, this is not your first workshop with us. Thomas and Diane.
There are some new people here that just joined. Maybe you want to let them know like what we were doing here, because there's some people that just trickled in right now.
So for the folks that are just trickling in, thanks for joining. We just wrapped up a really good workshop with Nic Chahine where we went through his unique way of leveraging options to sell the lottery ticket. So options work a lot like lottery tickets. We all know that. They can explode in either direction if you don't know what you're doing. And Nic completely flips the concept on its head with an option spread strategy. All right. And we're not talking about needing to have a huge account, needing to put up a bunch of collateral or anything like that. Like I just did one of his trades yesterday, and it cost me $350. And I'm looking at like 50% returns very, very soon on that one. And I'm happy with that. The concept that we are here for is steady income. It's hey, look, there's nothing wrong with looking for a way to get easy money. Isn't that all what we're trying to do? Guys, give me a 1 in the chat if you like the idea of easy money. There's nothing wrong with it. Easy money. So what I got to say about that is the stock market is a very, very cool tool. When you use it right, what do you think all of those Wall Street fat cats are doing with their suits on and all that kind of stuff? They're living the high life because they're making easy money. And so that is what we are putting together, this inner circle options chat room with Nic Chahine, to make it possible, to create opportunities, to teach you guys how to be self-directed options traders, to make it so that you guys are confident. If you guys, you're getting trades the whole time. If you want instant satisfaction, you're going to get it, because you're going to get step by step how Nic is doing his trades as he makes them. All right. So the instant satisfaction, yes, we're going to give it to you. And then if you want stuff to be super simple and easy to understand, yes, Nic will never use complex terms. He won't. Like if you ask him about the Greeks, I'm going to tell you right now, if you really want to get into the Greeks, Nic is not your guy. Nic will use the actual term. And he's talking about, instead of saying theta, he's going to talk about time. All right. He's going to use the word for what it actually is. All right. So there's never going to be any highfalutin stuff that you can't understand. This is made for anybody to use. Even if English is your second language, we try our best to be easy to understand, information easy to consume, so you can act on it. All right.
This didn't exist like back in the day. I know when I started, Neil, trading options, it really was like, you're joining like these public chat rooms. And I mean, just as much as I do, those are, it's just literally sometimes fake accounts, sometimes they're bots, sometimes they're pumpers, right? But at the end of the day, everybody that's in the chat room with the options inner circle is a verified member. It's a verified trader. Yep. So these are all real people that you're talking to and getting trade ideas from all over the world. I just signed somebody yesterday from Cambodia, Ireland, like Africa. Like there are people out there that really want to step up their options game, and you can't blame them, right? Because there's a lot of misinformation out there. There's a lot of people that get confused. They jump the gun, and then what happens? They blow up their account and they're out of the markets. So how many times can you really blow up your account till you're really out, right? So don't wait until that happens, right? Don't wait until you're down 80K, 200K to call me, right? You call me before so that we can get you set up with the right tools, with the right mentor, which is Nic Chahine. And that way you're all set up, because especially if you are working with a big account, you do need guidance. You need to stop trying to wing it, because winging it is not a strategy, especially when you're talking about money. Luck is not a strategy. If you are using that as a strategy, I guarantee you it's not going to work out in the long term. I used to do it that way. I blew up my account twice, and it's taken me time to be able to come to the point where, you actually know what you're doing specifically well behind the scenes. It's not, don't get confused with the Greeks. Like Nic is going to simplify everything. I know there's a lot of new people here, and don't feel overwhelmed. don't feel overwhelmed. We all started without knowing. Like Nick started one day and he didn't know anything, and then he started, getting better. We all start from that point, right? Nobody is born with all of this knowledge. People go through work, people go through a lot of experiences to be able to know this. And when it comes to the stock market, like, you don't want to really do that, because you don't want to learn by losing money. You want to learn from somebody who's already experienced that and is able to guide you in the direction, so that you're not blowing up your account and getting out of the market. Instead, this is actual real income that you can make.
Yeah, and that's as much as you can. And the reality is, when we do trades that are not successful, we share that. That's a learning opportunity, but we're limiting our loss. All right, that's something very, very key to what we started this off with, was the definition of risk. We always know our risk going in. One of the most important things is preserving capital. So we know, even before we start talking about how much we stand to gain, how much are we willing to lose before we start talking about that gain? And that's the truth there, as Rodrigo pointed out. 90% win rate on these spreads for Nic Chahine. So that's what you're getting into. So markets go up, markets go down, markets go sideways, and we've got a strategy for all of those market situations. Nick has been doing it for multiple decades, and that is what he is sharing with us, is basically a cheat code, or you're skipping a couple steps in your trading journey. Yes, there are going to be bruises. No, it's not just straight up magical. All right, Nick is not going to pull up in a Lamborghini and give you a leather bag full of pixie dust covered money. That's not what we're doing here. That's maybe if you follow someone on Instagram or something like that, and they got some BS pictures of them in private jets and stuff like that, that go there for that. This is about hard hitting, real ways to trade options to generate steady income. No nonsense. So there you go, guys. And if that sounds good, a no nonsense, no lottery ticket buying nonsense. Well, we do it occasionally, actually. Like if there's an opportunity to do a lottery ticket, we're gonna pull a double, triple, quadruple bagger. It has happened. It does happen. When Nick sees the opportunity, he drops it in. When someone else in chat is thinking maybe it's a good options trade, drop it in chat. Nick will give the seal of approval or denial. So that's not out of the equation. We have fun. And there are a lot of spikes on that way up, making steady income. So guys, if that sounds good to you, give me a 1 in the chat and let me know. I just need to know, for the folks that are still watching, where you're at. Where's your head at? All right, James, Christopher, Karan. I mean, it's common sense. No nonsense. So Shala, contact Rodrigo. We'll get that information in there.
Yep.
Okay, so guys, we can't keep Rodrigo all night. He's a very, very busy man. We can't keep him here all night. And I know that he's got a bunch of emails and voicemails that he's going to catch up on, because I see you guys asking questions. So if you need help signing up, you've got his information there. What I'm going to say, kind of my final remarks here, is number one, you're saving like more than $4,000 a year. Like, for the amount of time that Nick puts into this, and the technology upkeep and the live support. If you ever have a question or a tech issue or anything like that, this is not a Discord chat. This is Benzinga's chat. So you're getting live support from a real person who actually trades and understands what you're going through. We keep MSRP price around $6,000. And we're getting that down to about 1,200 and some change. And that expires at midnight. If you go ahead, click the link right now. Do me a favor, click the link. I just dropped it in chat. Just click it. It's the first one where it says click here underneath the check marks. Click here. And that's where you will see how much you will save. You'll see a countdown timer. When that countdown timer runs out, the deal is gone. Gone. So my recommendation is take advantage of the 14-day money back guarantee. We believe in this so much that you will get in the chat, that you will understand it well enough, that you'll be able to put the strategy into practice and see why it's so valuable, that you are not going to want your money back. All right. We believe that it's worth way more than what we're offering it for right now. It's an incredible value. So that's why we're giving you an extended 14-day money back guarantee at this absolutely low price. And if these are not claimed yet, guys, let me know by looking at the checkout. We're going to hook you up with a free laptop for getting in there. Is that Canadian dollar or USD? Everything's in USD, Derek. So, you know, I'm leaving with that. Like I on average, if I'm making an options trade or if I'm making a trade in general, my average amount that I'm going in with is 2,500. 2,500 is my average. All right. And then that's where I start. I'm scaling in, scaling out, whatever, sizing up, sizing down. This full year of 24/7 chat with trade ideas given to me, with a mentor that I can ask questions when I'm having a hard time and I don't understand what's going on in the market, or I'm not sure about an idea that I might have. This whole thing is half of that price, is less than half, or it's like exactly half of that price. All right, of a single trade. All right, and when I'm going in with 2,500, I'm expecting to make a lot more than that. I'm expecting to make my subscription, what I spent on that subscription, right back in a trade. In fact, I did it today. I paid for multiple inner circle trades today. So, which
you got multiple inner circles today.
Yeah, I got. Today was a good day for Neil. But so guys, if you had a credit spread that you wanted advice on, so you got to keep in mind, this is not a financial advisory service. If you want to find a financial advisor who's basically a salesman, go get a financial advisor. This is Nic's strategy and a group of like-minded traders, so we're trading together. And then, guys, you've got the link. Any more questions about the inner circle? And while you guys are drumming up those questions, Rodrigo, I feel like we touched on a lot of ground here, like the concept of selling the lottery ticket instead of buying the lottery ticket, the concept of knowing your odds of success before going in, the fact that you can be a beginner or super advanced and still end up much, much better off if you join this today. And then the fact that we're doing this insane sale, we're taking more than $4,000 off of it until midnight, so folks can get in. Rodrigo, what am I missing here?
So this is what I'm going to say. Okay, I know that Nic touches on risk, but he's talking about market risk. I want to talk to you about a different concept of risk. Okay. In life, you have to take risk. And I'm pretty sure you've probably heard that before, but I want to tell you why it's important, right? Failure is part of success, only if we learn from it, right? Otherwise, we live in eternal failure. So with the options inner circle, with the guidance of Nic, you're going to see the failures before they happen. You're going to protect your capital and you're going to expand your capital, right? If you really want that life that you think God wants you to have, right? You want to be successful in everything. You have to put more air in your bubble, right? You got to blow your bubble up. You got to take yourself out of that comfort zone. You can't live in that bubble. If you live in your comfort zone, that's where you will fail. Success is not a comfortable procedure. It's a very uncomfortable thing to attempt. So you need to get uncomfortable. You need to get comfortable being uncomfortable, right? If you want to be successful, I wish I could just tell you to go do a couple things and get rich, but that's not happening. That's not how it works. You have to get doggish. You have to get downright funky with it, right? If you really want to make it. If you want to be ordinary, that's fine. You don't have to listen to me. You can go on with your business. But if you think that ordinary is cool, no problem. There's a lot of really cool ordinary people. But if you want to be an amazing, successful options trader, you really need to learn from the best. This is what it comes down to, learning from the best, not learning from these YouTubers, like as far as like, Twitter people. You need to learn from somebody that has a verified track record of success. Nic Chahine has been with us for over 12 years. He's done amazing, not just for himself, but for his subscribers here. And I really want to share that because if somebody's promising you it's right around the corner, that's not how it works. You have to put some work into it. You have to put some time into it. Good things they don't come overnight. You don't build something big overnight. If you want to become a successful options trader, it's not going to happen overnight. You need to learn some things, and you need to unlearn other things that you thought were right. And that's what happens to most option traders. You need to learn from somebody that's been through the battles in the trenches every day. And I have scars to show it. And I can tell you that from Nic, I've been able to learn a lot, move ahead with my options trading game. I don't talk about my trades a lot. I don't like to top my horn, but I've gotten 10 baggers and stuff, but it's not really what we're doing. It's not really the main thing we're doing. You'll get them because they come, but you know how you get them. Number one, you need to know what you're doing, the first thing, right? But that's not like the whole concept of options. We're looking for long-term capital account growth. We're not just doing calls and puts. We're doing credit put spreads. We're doing covered calls. We're doing iron condors. We're doing butterflies. You need to know what these things mean, because if you're just using calls and puts, you're going to a gunfight with a butter knife. And that's not like, that's literally how big money takes, your money like that, because you don't know how to approach the trade per se.
Yeah, I mean, that's how you set yourself up to lose way more often. That is for a choppy win to loss ratio. That is going to make your P&L look pretty red, pretty bloody. If you track your trades over time and you're just doing calls and puts, which are looking on social media, looking on Reddit, and what is popular out there, and just trying to piece together what a bunch of folks online are saying, you're not going to be consistent. It's just not going to happen. I think maybe like under 1% of folks that go out and use the stuff that's just on like social media, YouTube searches and stuff like that will end up putting together a consistent strategy and generating consistent, steady income. And
that was my mistake. That was my mistake, Neil.
I think everyone's done it. I think we haven't had this stuff available for us in the past. That's why like Rodrigo, like I'm stoked that I get to work at Benzinga, and we get to work together to offer stuff like this for people, to save them a lot of time and heartache and confusion. Because losing money sucks, but then the mental process, the heartache of
imagine not knowing
loss.
Not knowing why you lost money is even worse.
With options. When first getting into options, like, why did I just lose every single thing I just put into this? Yes, I've been through that. That is, so you're just, not only are you like depressed, but you're confused at the same time. And I'm sorry we're laughing. Like it's not funny when you're going through it at all. But that's what we're trying to do, is get you in a situation where you have a mentor that's going to guide you. And really what this is protect you from doing dumb stuff. All right. And then show you what the smart stuff to do is, and get you on a plan where you're doing that consistently. And we don't want you to rely on Nic Chahine. We want you to start learning how he thinks, steal his strategies, steal his ideas, that comes with the subscription. And then start trading with the community, and then just become strong and confident and set up your own system for making your own steady source of secondary or primary income. I mean, that's all there is to it.
Don't make the mistakes that I made when I started with options, because you don't want to make those mistakes. And I wish I had something like this before. And it's every time, like Neil knows, like, back like 2-3 years ago, like 7 months ago, nothing like this, like a legitimate options chat room with a verified, trader like Nic and a verified company like Benzinga that you can trust. It all comes down to trust. Am I going to trust a Reddit board? You know my answer. Am I going to trust Benzinga, which our goal is to help and empower retail traders? Yes, that is why I'm here. It started as a passion for trading, guys, but to me at this point, this is a passion to helping other retail traders so they don't go through what I went through, okay? Everything that I was just going over here about not knowing why you're losing money and all that stuff, that was me, all right? That was me doing options. And that's why I laugh about it, because that was me. And now looking back, I really feel silly, right? Because I just jumped the gun. I went into this. I didn't know what I was doing. I was going by the Reddit boards and all this stuff. And, we really want you to be long-term successful with trading. This is not a hobby, like it's one thing if you like reading and you like going out for walks, but this is not a hobby. This is a full-time career, a business. Yeah. Yes. This is a life, an income, a profession. There's like it really needs to be approached like an adult, right? Not like a casino.
Mm-hmm. And man, it's hard not to laugh because they say tragedy plus time equals comedy. Because like looking back, I have gotten destroyed with things that like I did not understand what I was getting into with options on my Robinhood account on my phone. And it's like night and day how different it is. Like there are things back then where I was like look back now, I'm like, what the heck was I doing? And I can tell you, I've worked with Nic for a long time. And it wasn't until I think like mid 2020 that I really started to work more closely with him and really start just doing what he was saying, you know, like really listening. And it's like, I'm so different than I was. It is so different. Like there's so much dumb stuff that I used to do with options. Yeah, I mean, sometimes you do, like there's someone in chat here today was like, I bought a call and I was up, I made like $600. Did I do it right? Well, it's like, well, yeah, but like if you do that 10 more times this month, like what is your success to failure rate going to be? What I love about this, and it's like I feel so good about being able to get you guys into this, is the consistency, and the fact that Nic is just a good mentor. Like he knows his stuff, and he's not going to talk down to you, and he's not going to be like too much of a hot shot. Like he's not like he's a dad. He's got a family. He's a very normal, approachable person that loves charts, loves trading options, and loves teaching people and succeeding with them. So, I mean, it's great. Like we trade together, we make money together, we have good times together. It's a community. It's fantastic. And yes, there was a 14-day money back guarantee, Kenneth.
It's beautiful to see some of the people here because I've been here for a while, and there's people that I've helped, get to like the starter and the enhanced and the options ultimate, and in the chat room. And it's just beautiful to see the progress that some people have made. And I'm really proud. I'm really proud that we were able to save. We might be saving you from blowing up your account here, guys. Like this is real stuff. So I'm just really happy seeing some people here that I recognize the usernames because they've gone through the process. They've gone through the education. And they're totally different. Now they're schooling me in options. Like when did that happen? Yep. So Nic is that good. He'll make you somebody.
Yeah. That is true. So like, I love checking in on the chat. Nic always has his ideas. He's got a step-by-step. He constructs his trades. You get that instant satisfaction from Nic. But even Nic will tell you, like, there are people in there that find like pristine trades, like perfect. And like, there's no ego here. You know what I mean? That pristine trade, I'm going to take that. And I say, like, thank you, Rodrigo 24 racer or whatever. Like, let's go. And we set up the trade and we win together. It's just awesome. Go ahead. I was going to say, we got a question. Do you have a trial or a monthly membership? Not at this time. Not at this time. And I don't know of any plans to do that anytime soon. What we have right now is it's normally closer to $6,000. We've got that down absolutely as low as we can get that. So that's close. It's like 1,200 something tonight until midnight. And then play plus the laptop. So I mean, 14 days money back guarantee. If you don't like it, just cancel it. But I bet you'll come back eventually. I bet you'll miss it because it really is. We've put so much into this chat room in terms of making sure that it's easy for anyone to use, that there's something there for everybody, that everyone is included. The no trader left behind policy, meaning if you're not really sure what's going on, you're going to get special time put onto you. All right. This isn't like, it's not, no one in the world has time to be like your personal trading coach, like just like one person that just shows up at your house and coaches you on how to trade. If they do, they're probably going to charge you hundreds of thousands of dollars. But if you are falling behind and you feel like everyone in chat kind of gets something that you don't get, our no trader left behind policy means that you're going to get the full support, not only from Nic, but from our support staff that all trades. We all know how to trade options. We all know spreads. We all know Nic's strategy. We're going to make sure that you're in a good place, you're feeling confident, you're feeling good, and you're keeping up with the markets, and better than that, beating the markets. And that's what we're trying to get you into today.
And I want to know, I wanted to notate here. I always have like a little window of the chat room open, and I'm always seeing there what people, like what's going on there, what's the scoop. And for a couple of weeks now already, we were already preparing for this market dip. If you are surprised, whoa, the market's falling. Oh, horrible jobs numbers, right? Everything that's going on, and the market's making new all-time highs. Horrible jobs report. I mean, I go on and on and on, and the market makes new all-time highs. We were already buying puts on the market like several weeks ago, so we saw this coming, and that's the beauty of the community. That's Kenneth, you expected this dip. Well, in the chat room, we were way ahead, and we not only did we make money on the way down, but we got some nice falling knives as well. But that is the beauty of the community, right? Because we already know what's going on in the market. We actually read the economic numbers. We read the retail numbers. XRT, beautiful call from the chat room. Retail sale numbers went up. And, it's beyond the buying and selling, guys. This is actually understanding the economic influences in the market. It's understanding what's going on with retail sales and how is that going to impact XYZ. And even if you don't have enough time to be in the chat room, I recommend at least going in there in the morning, 7:30, 8 a.m., because Nick is posting the game plan every single day with lines of support, resistance, where you need to look for. And obviously, it's already like reading between the lines. If SPY drops below this level of support, it would not be a good idea to start a long position. But remember, we also have sessions only for members on the weekends, on Sundays, only for members, so that you can join there and have that group Q&A, adjust your trades, adjust your strategies, digest the news, which will translate into you adjusting your trades. That's what it all is about. The market from yesterday is not going to be from today. 2021 market is not going to be 2025 market. So things always constantly change, and that's the ongoing education. So if you guys get this 70% off today, you will, because this is a yearly subscription, next year you will keep that. Okay, so even if it goes up, which it will, and it won't have a laptop, you keep that. That is yours, and the laptop is yours to keep as well.
Yep. And then, so we got a question: do I need to sit in the chat room all day? Do I get alerts? So look, you're going to get information when you seek it. Is what I'll say about this. So on Sundays, you're going to get the full week strategy session. You can interact as much as you want. There are many chatters who are very enthusiastic and participate a lot, and we come up with a lot of good ideas together. But ultimately, if you just want to check in chat on Sundays, you can get all of your trade setups for the week right there. All right. If you want to be more active, you can do Monday and Sunday. If you want to be really active, you can go in 7 days a week. You're going to get everything that you put into it out of it. And then Shala, you were under the impression that Benzinga Pro comes with it. No, this is completely separate from Benzinga Pro.
But you can call me. You can call Rodrigo, and we can talk. And
call Rodrigo if you want Benzinga Pro. If you want the research tool to do your due diligence on and be more active, Rodrigo's there to hook you up.
Guys, and just know, like, my background, like I came into Benzinga as a trader. I am a trader. I'm on your side. I really push for you. And, that's kind of, where we got the mentorship going, right? Nick mentored me behind the scenes because I was trading. I'm lucky enough to get, Nick's services here. So I've learned a lot from him. And we were like, we really need to get this out there because people need it. People need options education. Why? Because I get these calls, man. Like, I'm down 80K, I'm down 100K. And like, I genuinely don't like those calls, man. But so now this is why we're reaching out. That's why we're doing these workshops. That's why we're here. That's why we do this as much as we can, because we can possibly save people from blowing up their account. And that is my satisfaction. My satisfaction is helping you become a better trader.
Yeah. And like, let me tell you, like, it feels good to be able to sit here, like me and Rodrigo, talking about this, giving you this deal on something that we know is really good. All right. This is not BS. This is not crappy. This is not a bait and switch or anything like that. Like, it feels good to be able to give you something that is real, that is high quality. And having Nic Chahine involved is a huge part of that. And then do you have Benzinga Pro with the Squawk feature? Kenneth, if you want to get Benzinga Pro, talk to Rodrigo. Rodrigo's got some Benzinga Pro for you if that's what you want, but that is separate from what we're talking about here. Yeah. So my question is, why do you feel your advice is worth $1,200 to $5,000 a year? What's the expected return per ? So Mark, we don't put an expected return on the year. That's if you're thinking about it that way, like that's when you're going into investing, the first thing you need to think about is preservation of capital. You have money somehow, whether you have a lemonade stand or you own a landscaping business or you're an executive at a tech company. All right. So the first thing that you need to think about when you've got an investment account is protecting that capital during times of economic influx and inflation and all of those things. The next thing that you worry about or that you think about is getting that money to make money for you. All right. So there are a million ways that you can use different aspects of the financial markets to make money for you. What we are offering is a decades tested system with a 90% win rate for Nic's trades for steady income using option strategies. Why do we feel the advice is worth $1,200 to $5,000? Because it answers that equation of making your money work for you, and it teaches you. So Mark, what I would say is if you're not sure, you could try it out, and if you don't like it after 14 days, we'll give you all your money back. But other than that, you can go to trustpilot.com. You can look up Benzinga reviews. You can see what other people have said about it. That's a verified source. We can't tamper with that. You can put whatever you want on that thing. We can't mess with it. As long as someone is an actual customer, they can put a review up, and we maintain 4 to 4.5 stars, an almost perfect score. It's impossible to have just 5 stars on that site. We maintain almost perfect. Glowing testimonials about Nic's approach, success stories. So why do we feel the advice is worth that much? Well, because it works. And then number 2 is we put a lot of time into it. Nic puts a ton of time into it. I put a lot of time. Rodrigo puts in a lot of time. We've got a support staff full time to support you. And we're providing the technology. It's not just Discord. We've got a better chat. We've got that's constantly being improved. New chat is going to launch this week. It's going to be a completely different experience. And there's just so much more there.
I think it's a great question also, Neil, because when you think about it, I don't know what kind of account you're trading with, like whoever asked that question, but what kind of price do you put on blowing up your account 1, 2, 3, 4, 5 times?
Yep.
What kind of price do you put into actually knowing what you're doing and actually consistently making gains besides the factor of luck? I don't know what kind of price you would put on that. Blowing up your account and being out of the markets. I mean, it's really up to you. The good old way fashion is, go out there, try to do it on your own. If you blow up your account and you're out of the markets, we won't hear back. But that's unfortunately 90 something% of retail traders get out or get kicked out in less than 1 year. So if you really want to be the golden goose, if you really want to play the golden goose and take that approach, hey, 90 something% of traders approach it that way, and the big majority of them are not even in the markets now. So it's pretty serious. And for what it is, $12.97. As a trader, I've been out looking for stuff, and I can tell you that this is nothing. Like, there's people that'll charge you $5,000 for a video of support and resistance, And I get those calls. And this is totally different, my friend. So I don't know. I mean, look, some people have experiences because they've dealt with other companies and all that stuff. But Benzinga is Benzinga. We're an international company. We only bring quality to the table. And you're looking at people with real results. You're looking at me here. I'm a real trader. Okay. I'm not an actor, even though I look, handsome and everything. I'm an actual trader.
You got an actual thing going. But yeah, no, Rodrigo is a real trader. Rodrigo and I often talk about the trades that we're making. Rodrigo is often outpacing me. He's a good options trader and he stays on top of his stuff.
But it didn't start that way. And I just, I don't want people to get the wrong idea. Like, yeah, I could get some big winners, man. But like, I've gotten losers too. And I've learned, I got the scars to show it, man. But like, don't go that process, man. Like whoever asked that question, like, don't go through that process of trying to fight to be a successful options trader, because you really need somebody like 20 years of experience. Do you really undermine 20 years of successful options trading? I mean, we live in a world where 50% is not enough gains, Neil. We want 5,000% gainers every single day. And if not, it sucks, right? This is the problem when you get spoiled traders from the 2020 market. They have a misconception of how the market works. And it's our job to set proper expectations. We need to be real with people. We can't just pretend that stocks will always go up. And 2020 is a year you're not going to see again. That's why everybody from 2020 got washed up in this market. As a matter of fact, Goldman Sachs put out a report. This is the dip that we've had that retail has not bought the dip. So there were dips that retail bought the dips, right? This is the dip that they've less bought, that they bought the less. So that tells you that there's less retail in the market. This is not, why is this should not be a surprise. So if you just jump into the market and try to get without education, you're really going to get hurt. And like, I don't want that to happen. I don't want you to get hurt like I did, because, some people really will not have access to the markets again. You'll blow up your entire savings account. Like this is not just about trading. This is about really being successful and making real income. So it's not like a Reddit kind of thing here, like we're really trying to help people create income, create revenue. I talk to people here that really depend on it, like single moms or husbands and wives that are really trying to get better in their trading and really trying to find that solution because it hasn't worked for them. And we have to obviously point them in the right direction with Nic, with the education. And I've heard stories as well where people lose mortgage the house, homeless, like these are on GameStop, that kind of thing. Like you have to be, you can't let your emotions take over, because when that happens, it's because you don't have real insight on what to do. If you fall back to your emotions, it's because you don't have a process, you don't have a strategy. And that's what Nic is there for. Just the fact that you have Nic, well, almost 24/7, because I mean, I've seen him there pretty late, but like, if the market's tanking and like, imagine being in the chat room and being able to profit with Nic Chahine when the market was dipping, being able to, like, it's the
that
fact
will
that you
happen
have
again.
there.
That will happen again.
Yes, it will happen again, and you want to be prepared.
Yep. There are more times of extreme uncertainty to come in the market, and being in a community makes all the difference. Apart from being alone there with your phone or your laptop trading. And that Shala, I got a really good question from you. I've really been looking to learn options in a tailored way and have a community to learn and trade with. Is this good for an absolute beginner? And I said, yes, it absolutely is. In fact, I think if you're looking at a bunch of other chat rooms that are out there, like I'm in a lot of chat rooms. And I've been doing it. I know, Rodrigo, you've been through a lot of them. A lot of them you go into and you have no idea what the hell is going on. That we do a lot of work to make sure that is not the case. If for 1 second you go in there and you're not sure what to do, just raise your hand and say, hey, Nic, I'm not sure how to start. And Nic will help you out. We will be there for you. Everyone there is there to trade together. All right. It's not just like shouting out ideas and then we take them and it's every man for themselves, or every person for themselves. It's the opposite. All right. We're there together. That's why when people join, which we got a couple here, Ken, welcome to the family. Prasa, welcome to the family. Aaron, welcome to the family. Descend, welcome to the family. That's why we don't just call it community, we say family. Because this stuff's important. When you're really out there and you're dealing with risk, you're dealing with your money. You really start to form a bond with the people that you're trading with.
A lot of people have done that. I've seen people like that have made friends and like, you know, and it's so cool because number one, they're real, right? Verified real people.
Yep. Absolutely. Absolutely. No BS. So guys, it is getting late over here. We've given our final remarks. Rodrigo, I want to give you the last words. I'm done. If you guys don't take this deal, I think that you guys need to get your head checked. But Rodrigo, I'll give you the last words.
Okay, well, ladies and gentlemen, if you've made it this far, congratulations, because it definitely shows that you have a real interest in learning. And I can tell you that if you want to get far in life, man, if you don't have an interest for learning and becoming a better whatever that you do, it's you're not going to get to that goal, right? You know, we need to have goals, right? What do you want to do, right? You want to be a successful options trader, and you know, what is your goal after that? Or do you just want to accumulate capital, right? Whatever it is, you need to understand that in order for you to get to that goal, you need to apply discipline, which you've done because you're here, and you need to apply consistency. Those two things are the name of the game, right? You can be good in one trade, but then if you're not consistent, you'll just give it all back. And I'm pretty sure we're all familiar with that. So we need to apply consistency. We need to be disciplined and follow the strategies that work. Stop doing these YOLO plays, or at least don't go all in. Okay. Like just a little part of your portfolio. But like the thing here, guys, is that you want to be a successful options trader. It doesn't happen in one day, like right away, because yeah, you can get Nic's trades and you can bank on them, but he's also going to show you the thought process, the technical analysis, the fundamentals, the micro, the macro, the price channels, the economic explanation of what's going on. Like some people don't even know like when Powell's going to speak, and then they're wondering why the market tanks. We already prepare for these things, guys. That's why we don't get caught off guard. And if you're not focused, you will get caught off guard, because that's what happens, right? You're just looking at the chart, you're thinking of higher highs and higher lows. But back to my previous point, there's more to the market than just hitting the buy and sell button. So don't fall into these, I guess, traps per se. Your emotions, your mind will play games with you. And that's really natural because we are all humans. But it all comes down to controlling your emotions, being disciplined, sticking to what works. I know we all get that feeling that, oh my God, let me get some AMC calls. Like we all get that feeling. But I mean, you have to be real with yourself, right? Like you also have to understand that you need to manage risk. Risk is so important. And we've touched risk here in many different aspects. But really, I mean, if it's a 14-day money back guarantee, there's no risk. But anything else besides that, you need to know, guys, the market doesn't care if you're trading with your grandmother's life savings. The market will snatch it from you in 1 second if you don't know what you're doing. So you work very hard for your money, right? So you want to make sure that it's in good hands. Maybe, I mean, if you know for sure that, you know, if you're having trouble with options, you might want to follow somebody else. You might want to follow somebody that's verified, that has a successful track record, 90% win rate. And like really, Nic should only be like, I mean, Nic is there a lot. Like he's there early in the morning, late at night, on the weekends. Like the other time he was on vacation and he just popped in the chat room, did a workshop for you guys. And, you know, got a shout out to him because, you know, Nic cares as well. We all care. Like that's what we're here. We're a family. Like maybe you don't see it that way, but we look at you guys that way. We're a family here of traders, and we all are here to help each other out. And that's what it is. We have your best interest at heart. We definitely want you to be successful in the long term. And that's really why we go hard here. That's really why we're giving you these workshops as much as we can, because we care and we want to reach out, right? I was getting the calls in that like, hey, Rodrigo, I blew up my account 100K. What do I do? Like, do you have any education? Well, now we're doing things different. Now we are reaching out to you guys so that we can avoid that. And that's why we're here. And then the calls I get are different. The calls I get, Neil, are like, hey, man, thank you so much. You've literally helped me, you know, be able to understand options and trade better. This one guy called me. He had to call his brokerage. He couldn't believe he made that much money. So, literally, so there are some good calls as well. But, you know, that's why we're proactive. And that's really what I want to emphasize, guys. Be proactive. Ask questions. You have a very smart options trader, Nic Chahine. You got to pick his brain. You got to pick his brain.
Yeah. And I guess I just do have a couple of things. Mark on YouTube had some good questions. And you know, Mark, I hope you're okay, Sharon. I mean, obviously, or you put it on YouTube. But you mentioned you had a recent account blow up. And, Rodrigo's had his account blown up. I've blown up an account.
Twice.
Two blow ups. I know Luke over at Benzinga has had three.
Yeah.
So we've been there. And, the idea here is the market's not going to give you a full 14-day money back guarantee. All right. What it's going to do is teach you the hard way. All right. You're going to lose money eventually. All right. And you don't want to, that feeling of blowing up an account, that mental anguish, you don't want to have that again. And the way that you mitigate that you prevent that, is by getting mentorship, learning right, and sticking to a consistent, proven strategy before you start going out and doing anything goofy and highfalutin. And I don't think you need to do that stuff. Like that, like Rodrigo said, when there are times when there's a potential 10 bagger, meaning a trade that's going to go up 1,000%, when that happens, it comes to us. The market brings that to us. We don't go around chasing it because we see people bragging about it and based on FOMO. We're watching the market. We have a consistent income strategy in place, and when those big baggers present themselves, we're ready for them. We let them come to us. We're not going to go around wasting time seeking I don't know, a white buffalo or a white whale. That comes to you, and it does happen. It really does happen. It happens. And then if you want, you can go on social media and you can be that asshole that rubs it in everybody's face. That's totally fine. But just remember that everyone is humbled eventually by the market, and we want to make sure that you're not destroyed financially and emotionally by the market. We want you to know what you're doing before you do it, and that's what this whole thing is.
It just takes a couple of bad option trades. It just takes a couple of bad calls you buy, and that's it. 30% on the first trade, lose 20% on the second one, lose 30 on the third one, and like you're just fighting an uphill battle at that point. And then what happens? I'll tell you exactly what happens psychologically. I just remember, it's just the feeling is so like in touch with me. You're going to start revenge trading, okay? You're going to go find these damn penny stocks and trade in OTCs, and you're going to start taking higher and higher risk because now you have to get back to where you were because you feel that you are a lesser self, right? This is all psychological, guys. And I'm really opening up here because I know that like we're all in the same boat with this. We all feel the same way. We're all human. And really, that's what it's about here. We're trying to, like break the stigma, right? It's not that easy to just make good trades like that. You really need to take your time. Look, Sonny, true story, right? Like how am I supposed to, like, am I reading your mind, guys? Or are we all in the same boat, right? So we keep it real. We're very honest about all these things. And it's because we care. That's what honesty is about. We're building trust here, right? It's all about trust, guys.
Yep. And also shout out Jeff and Hectic for joining the options family. Welcome. Can I get an air horn? Rodrigo did that right there. Yeah. All right, guys. So we're going to leave it on that note. Thank you so much for hanging out with us during this workshop session. My name is Neil Hamilton. My lovely guest here is Rodrigo. If you have questions about anything that we've talked about, Rodrigo's information is in the chat. It's all over the place. Email and phone, hit him up. Rodrigo, I'm going to let you get to your follow-ups because I know you got voicemails. I know because people are saying, answer me, Rodrigo. So we'll get to you. Nic Chahine was here earlier. If you're in Zoom, you'll get the replay because you registered. You'll get the replay. I'm not sure how long the video will exist because it takes up server space and we pay for it. So, watch it as soon as you get it, please. Because I can't guarantee it'll exist it forever. And then, everybody else on YouTube, thank you for being here. Get the deal. Get the deal. Don't be silly. Get the deal. Join us. This is a good time. And you know what? Until the next workshop, happy trading.